I want to start with the most actively traded stock this morning, and that is Intel. It is up nearly 9% in the pre-market. It's on pace for hitting an all-time high today. And here's what's behind it. President Trump said that Apple has agreed to work with Intel to design and build semiconductors right here in the U.S. And so this is a big deal for Intel, landing Apple as a customer. It's a massive win for the company and could potentially attract other businesses to do the same thing. It's been trying to, it's a key piece of the company's comeback plan, really.
We've only heard from President Trump on this.
Correct. That is correct.
He's being a sell-side analyst as well. But wait a minute. Is he an owner of this?
Well, exactly right there, Tom Keene. Right? The U.S. owns 10% of Intel. They did that deal last year. So, yeah.
The stock is up
all the tentacles.
Do our taxes go down because we made a pop on Intel?
I would think so.
I'd like that.
The stock's up year-to-date 230%. Over the trailing 12 months, up 460%. This is Intel, people.
I mean, does my congestion pricing fee go away in Midtown Manhattan because of this?
Exactly.
I'd like that.
Next.
All right, let's go to Kroger's, a supermarket chain. Sales, Stock is taking a beating today, though. It's down about 8% right now and really hasn't done much of anything lately. It's down about 1% year to date. Sales beat expectations just barely last quarter. Again, showing that shoppers are prioritizing groceries, buying those basic necessities as they continue to, look closely at their household budget. So Kroger said same-store sales grew 1%. That's excluding gas, fuel prices, or fuel sales. That was slightly better than expected. Wall Street is also looking to gain market share here under its new CEO, Greg Foran. And he was here at Bloomberg last month, and he said that Kroger's is going to implement their largest price cut in years to be more competitive with rivals such as Walmart, Costco, and Amazon. Of course, Wall Street doesn't love that idea. Got to cut the prices. So they also maintained their full year guidance, though. They said profits were squeezed by higher transportation costs. So again, those fuel costs playing there. Price cuts, those planned price cuts, and lower egg prices actually hurt profits at Kroger's.
All right.
I buy fancy eggs. They haven't come down.
The eggs?
What are your fancy eggs?
I don't know. They're handpicked.
Crazy. Okay.
By a Buddhist monk. I go out and I don't know. Give me one more.
We're going to do a hard turn and talk Smith & Wesson, the ticker symbol SWBI. The stock is up nearly 15% and rallying nearly 4% year to date. The gunmaker posting a 27% jump in revenue last quarter. New products, especially handguns, helping the company gain market share here. Now Smith & Wesson expects around 15 to 20% revenue growth in the first quarter, mid-single digit revenue growth for the full year, and new products made up almost 38% of the company's fourth quarter shipments. They also entered new categories such as hunting. I would have thought they were already in that. And sales remain strong. Inventory levels declined even as the company raised prices. So even Smith & Wesson is raising prices. They also paid down their debt. Wall Street likes that as well. They ended the year with $20 million in debt compared with $80 million a year earlier.
Alexis Christoforous, thank you so much.